Everybody, this is Lara from Pure Elliott Wave with an updated XRP analysis for you on 19th of June 2023. I'm expecting XRP has found a sustainable low in November 2022 and my target for the next wave up is $8.10, might be met in June 2025. For the very short term, I expect more upward movement to at least a little bit above 0.6436 and then another large pullback. Price does not move in a straight line. There will be pullbacks and consolidations along the way up. This analysis for XRP for the bigger picture is very bullish. From the beginning up to this high here, I see a 5-wave impulse. I'm labeling cycle wave 1 complete. It lasted 3 years, and then a double zigzag, a 96% correction of cycle wave 1. Cycle 2 lasted 2 years. So this fits perfectly as a double zigzag, and the proportion between cycle waves 1 and 2, with 1 lasting 3 years and 2 lasting 2 years, looks really good. From this low to this high, this upward movement fits as a leading expanding diagonal, and from this high to this low, this downward movement fits as a zigzag. So now we have a primary degree wave 1 lasting 1 year and a primary degree second wave lasting just over 1 year. Again, the proportion for this wave count is very good. At $8.10, primary 3 would reach 4.236, the length of primary 1, and if it lasts possibly 3 years, then it may end in June 2025. If primary 2 continues lower, it may not move beyond the start of 1 below 0.1138. Before I jump into the weekly chart, I just want to remind you I'm presenting with the Elliott Wave Hub forecasting event next Tuesday at 2 p.m. You don't want to miss this one. You're going to have 7 experts, here they all are, hosted by Jody Samuels. You're going to have us all giving you a whole bunch of free information. I'm presenting at 2 p.m. and I'm going to be covering cryptocurrencies. So I'm going to be covering Bitcoin in quite a lot of depth, and I'll also look at Ethereum and XRP. So those are the 3 most popular cryptos you'll want to see my wave counts and analysis for. I'm going to be looking in depth at how to use Elliott Wave to use with cryptocurrencies. What are the quirks of these particular markets and how does that fit into an Elliott Wave structure? And then I'm going to be using classic technical analysis tools and techniques and show you how I use those tools to identify that December 2017 high just 6 days after it happened, and how those are the tools and techniques I'll be using in the future to try and identify further sustainable highs. So I'm trying to teach you how to do it yourself. So if you want to learn from that experience in my CMT, then join me on 2 p.m. next Tuesday. You have to register in order to see this, so I've got the link below. Click on the link, go and register, and you have to view it live if you want it for free. If you want to view delayed coverage because you can't get there live, unfortunately it'll cost you $19 this year. So I look forward to seeing you live next Tuesday at 2 p.m. Let's take a look now at the weekly chart where the low, cycle 2 here, is this low back here. I see primary wave 1 as a leading expanding diagonal. This has a great fit. All the subwaves look like zigzags. It explains all of this overlapping. From this high to this low, primary wave 2 fits really well as a double zigzag with the second zigzag extended in time. Where 2 ends, 3 begins. At $8.10, primary 3 would reach 4.236, the length of primary wave 1. It may only subdivide as an impulse, and that'll be labelled intermediate degree 1, 2, 3, 4, 5, and it must meet all of those core Elliott Wave rules. I am seeing intermediate wave 1 incomplete. It'll be too brief to label it over here, so I see it as incomplete. So when it arrives, intermediate 2 would be a multi-week to multi-month correction and could be very deep, another relatively short-lived bear market to come, and intermediate 2 may not move beyond the start of 1 below 0.2794. Let's take a look. Before we go there, this channel contains all of primary wave 2 and it's confidently breached. And then we have a back test of support and now moving up and away. This is absolutely typical behavior around a trend channel. And this gives us confidence that this low and is likely to be sustained because the channel containing the bear market is so confidently breached by upward movement on a higher time frame, on the weekly time frame. Let's take a look at the daily. I'm going to look from this low down here This point down here, my previous analysis had expected 1, 2, 3, 4, 5, but this moved a little bit lower and overlapped wave 1 price territory. And so I expect now that an impulse is not unfolding for minute 1, and leading expanding diagonal explains all of the overlapping we have here. So if this is a leading diagonal, we may have a zigzag for 1 and 2 and 3 and 4, and now looking for a zigzag for 5 to complete. A nice impulse for A up here, an expanded flat for B down here, and now looking for a 5-wave motive structure upward for C. The diagonal is expanding, which means 3 is longer than 1, 4 is longer than 2, and the trend lines of the diagonal are diverging. Because the diagonal is expanding, that means 5 must be longer than 3. 5 would reach equality with 3 at 0.6436, so it needs to end at least slightly above that point. Draw the diagonal trend lines on your diagonal, that's the convention within Elliott wave, to show what structure is expected, and expect support at the lower edge of this diagonal trend line, because diagonals normally adhere quite strictly to their trend lines, just like Elliott wave triangles. You can have tiny little overshoots, but if the trend line is properly breached, then it's probably not a diagonal. That doesn't break any Elliott wave rules, it just means it doesn't have the right look, and so you need to try and find another explanation for what's happening. Within the diagonal, minuet 4 may not move beyond the end of 2 below 0.3518. Minuet 4 has overlapped wave 1 price territory, and that's what it must do for a diagonal. So this Elliott wave count, as always, as all my Elliott wave counts always do, meets all Elliott wave rules. We've got an overshoot on the diagonal trend line here, so this doesn't have the perfect look, but I can't see another way to label this downward movement. And so this is what I mean. Diagonals should adhere nicely to their trend lines. When they don't, it reduces the probability, but this is an overshoot, not a proper breach. But it does, I'm only labeling this like this because there's just no other way I can see to label this corrective movement. That's how it fits and meets all Elliott wave rules. On the weekly chart, we can see a really strong zone of resistance, about 51 to 55 cents. ADX tells us there is an upward trend, and it's quite a long way from extreme. And this market, all cryptocurrencies, when their trends, particularly upward trends, reach extreme, they can get very, very extreme indeed. ADX can get into the 60 to 70 range. So it's a long, long way away from being extreme. But price is hitting this strong resistance, and it hasn't been able yet to break through. This ADX tells us there's an upward trend, and we should see a break above resistance sooner or later. On balance, volume is also range bound as price is range bound. If it breaks out of this little zone prior to price, we may have a signal of the next direction for price. Support, if we see a pullback here, is about 35 cents. RSI neutral, money flow neutral, stochastics all neutral, and ATR declining as price consolidates. So the bottom line is I want to see a confident break above this zone of resistance to really have confidence in my Elliott wave expectation for more upward movement at this stage. On the daily chart level, we can see at these highs we have 2 bearish candlestick patterns and 2 bearish engulfing patterns and a bearish upper wick. This isn't quite a shooting star because it's got a bit too much of a lower wick, but there is still a strong bearish implication from that upward wick. As price was falling here, volume was declining, and now price is rising. Volume for the last 2 sessions, day on day, is showing a little increase. So there's a little bit of support from volume for upward movement, although volume does remain very light and well below average. However, there's a decline in range for these upward sessions, so that really is giving very mixed signals. That's the volume profile isn't really that clear, and with range declining for these little upward sessions, it's just not that clear. So I can't really give you a conclusion for the short-term volume profile. Strongest volume recently has been down, but price was falling of its own weight down here. For the very, very short term, because we've got a little bit of an increase in volume, I would expect some more upward movement, but because volume's so weak, it might be a bit limited. This is a slight concern for my Elliott wave count. There's a hammer candlestick pattern here telling us there's been a trend change. That could have been resolved by some upward movement though, because candlestick reversal patterns do not tell you how long in terms of duration the next trend will be. So it could have just been telling us there's just a little bounce on an ongoing downward movement. At this time frame, ADX is declining and the DX lines are whipsawing. There's no clear trend at this time frame. At the weekly chart level, it still tells us, at the weekly chart level, ADX tells us there's an upward trend, but at the daily level, it's consolidating. So with ADX declining, RSI money flow and stochastics neutral. Stochastics just reached oversold here. Price nearly found support about 0.45. I'd expect an upward swing to resistance, and that strong zone 51 to 55 cents is next resistance until stochastics reaches overbought. That would be the model I use in a non-trending market at the daily time frame, but the weekly time frame tells us there's an upward trend. That's it from me with some XRP analysis for you. Don't forget, register for that event on Tuesday. I'll be there at 2 p.m. covering Bitcoin, Ethereum and XRP, and quite a lot of in-depth information about using technical analysis along with Elliott Wave to try and identify sustainable highs and lows, because at the end of the day, that's what we're here for, right? We want to know when to buy at a low and when to sell at a high, and you need to use some kind of analysis to do it. I'm going to show you how I do that. Thank you everybody for your support. I really look forward to seeing you on Tuesday.